Hello, everyone. Happy Wednesday. How's everyone doing? Good morning, John. Good morning, Patrick. Good morning, Heinrich. Good morning, Bull Strike Cheetah. Good morning, David. Good morning, McRangers. Good morning, Jacob. Good morning to everyone in the background and people still filtering in. How's everyone doing this fine Wednesday morning? Are we going to get market pullback 2 days in a row? Wow, that would be shocking. Back into the rotation zone. All right. Very quiet. Remember, we started off this week very quiet. Good morning, PMG. Today, we got the mortgage rate, again, bumping up. 30-year yields above 5%. We're going to have to see if it can actually close above there. There's been selling pressure constantly during the U.S. session on the 10 and the 30, which means buying of the bonds, but selling on the yields. So we're going to watch that. Mortgage applications down, but nothing really there market moving. We got the EIA numbers for the crude. It spiked last night, completing the 4-hour double bottom pattern, completed yesterday with the spike that maybe Israel's going to still attack Iran and their nuclear facilities. We'll see. So we still got EIA numbers coming out this morning. We got Barkin speaking at noon. Not as much Fed speak as yesterday, thank goodness. But very quiet day. Tomorrow, just remember, we got jobless claims. We got the S&P manufacturing. We got Kansas City Fed. But tomorrow morning starts picking up the numbers. But today is very quiet. S&P, Palo Alto reported was a beat yesterday, but gapping down nearly 5.5%. Your mega caps, except for Google and Tesla, are all negative. UNH has got up close to the rotation zone and now rotating back down. So now I'll be watching for the potential longer term bottoming pattern in UNH, especially closer to that 87.5 level. All right, we have Raytheon up today. So in terms of our groups, energy is the only thing that's leading, and everything else is negative going into the open. Fed Watch still has pause in June, pause in July, first cut in September. Fear and greed still solidly in greed mode. Schiller PE at a not so cheap 36.51. Hello, Charles. All right. People are filtering in today. So first off, on this, we still had a potential double top. However, if we do the count off 1, 2, 3, 4, 5, 6, 7, 8 between the peak and peak, and then we count forward 1, 2, 3, 4, 5, 6, 7, 8, it did not confirm or trigger within the count, so that is off the table. Right now, trading at a very key support level going into the open. So that's what I'm keeping an eye on. And right below that's the daily rotation zone. So if we start breaking below 59.15, the key little level for me is the low from Monday, 58.92.75. Okay, we break below that, then I'm watching closer back to 58.30 area for a potential bigger pullback. Other than that, this is a very, very key support area. Remember, we have cycles on rolling over still on the daily. Now, it's going to get interesting because the weekly perspective, we have cycles still at the top. So we could get a pullback, another rotation back up over the next couple days. We'll have to see about that. And then putting in a more significant topping pattern. Remember, we haven't quite checked off that 87.5 rule. We've got very, very close. So that's what I'm watching. Since we don't have the double top, those are the key levels I am watching. The lows from Monday, and then it's really stair-stepping down. Even before that 58.31, you have some minor support, 58.80. And when you don't have the double top pattern, I have to at least move, if from any shorts, I have to at least move down a stop at some of these key rotation points. However, watching this very key level going into the open. Hey, glad you could make it, Sterling. Hope you had your meeting went well this morning. Good morning, Connor. Thank you for taking the time to tune in. I know you were busy this morning, Sterling. All right, that's why there's no news in here. By the way, Sterling let me know last night that he'd have some meetings this morning and might not even make it, and he is here. NASDAQ. Remember, we don't have a double. We're trading against a very key level right here, 21,245. Remember, when I also talk about a key area, it's not to a tick or anything. It's an area I'm watching. So I'm watching this area for support into the open. If we break below that, then I'll be watching that to possibly turn into resistance. And just like Monday's lows on the S&P, that's the key level. If we do break below this area, I'm watching Monday's lows. And then we got to still do the stair step down. The next key area is about 20,975. All right, but these are, we get, again, daily cycles going down, out of overbought conditions, still holding the top of the rotation zone. Does anything here, even if we start to pull back, even if we don't hold these lows, and we have the bigger pullback, does this do major technical damage? No, it doesn't. Even approaching the bottom of the daily rotation zone, it's even above the prior breakout levels. And it's still above the 200 and above the 50. So that's where I'm keeping an eye for bottoming patterns in here, especially possibly going into tomorrow morning. Dow. The Dow, remember, the two ones I'm watching first for the bull moves are the S&P and the NASDAQ. The Dow and the Russell, I am not as much. And now the Dow is getting pressure from UNH again. Dow trading against the top of the rotation zone. If we pull back a little more, we're trading right against key support going in the open right here. But if we pull back even more, then the next major support area, the next major support is about 41.9. Okay, still in the rotation zone and still right around this gap up open. Russell, which is my least favorite for bullish moves, you see here it's been in sideways consolidation since the 12th of Monday. So over a week, it's about a week and a half, trading against very key levels below the rotation zone. If we do break down, going to be watching this gap open price, 2,074, then the low from that day, 2,053, and then major supports coming in at 2,045. Yes, the eyes are on the bond markets. Target was a miss and is down. Thank you. Jacobs taken over because Sterling was a little busy this morning, but Jacobs taken over, putting in some earnings stuff. TJ Maxx was a beat, but down. There was his best Sterling impression. Very good, Jacob. So that's where we sit. Again, from the short side, if we do get some more pressure, the first thing I'm looking for is shorts in the Russell. From the long side, the first ones I'm looking toward the S&P and NASDAQ. VIX, a little up. I will sit up and pay more attention if we start. There's a very key resistance shelf in the VIX right around 1985, but then it's got to fall through above 20. I'll start really paying attention to a possibly bigger pullback if we get above there. Otherwise than that, this is just an orderly pullback. The DAX, we still have a potential double top in here with cycles at the top and very overbought. Still paying attention to that. If the DAX breaks out, though, we get 8 pushing the price higher, you get 24,632. That's the only big rollover play. Minor support right now is about 23,800. The notes coming back, still being able to hold this key support level over the last few days. That's what I'm keeping an eye on the note futures. The yields. See, the last couple days, we've had selling. They were higher during the European session, and we got selling pressure. I'm going to watch to see if that still comes in or if this can finally stay above this 4.53 area. By the way, the potential double top, no longer on the table. So, rotation zone holding. This is a really nice base building for a breakout. And remember, we still have the 87.5 rule. The 30-year, again, we've had a lot of selling pressure on Monday. Minor selling pressure on Tuesday. And now the yield's back up above 5%. I'm paying very close attention to where this closes today. And if it can hold above this 5 on the 30-year government bond yield. Speaking of yields, let's just jump to this is the 40-year. Now, this looks like it might be setting up a short-term top. I mean, it went pretty vertical, and you look at that on the weekly, but this is unsettling to the Japanese markets. So, passing 3.6%. And here's your monthly chart. Look at this. Look at that. This goes back to 2007. Look at this, breaking the highs. I mean, we had a spike high in January of 11 at 3, and we've torn through that. So if you want to really watch a potential canary in the coal mine, keep an eye on the 40-year, and you can watch the 30-year yields in Japan. Not saying that they're getting a little overdone, so we could see a pause or some consolidation, but keep an eye on those because those could actually be something that has a ripple effect a little more medium term in the markets. Oh, Sterling's designating Jacob as a backup. You got the role now, Jacob. There you go. You stepped in it. You stepped in it. Dollar index. Okay. Was watching yesterday. We had a potential double bottom at one point. That's not on the table anymore. We're now trading against the 62.5. If we close the day below 99, just go 99. It's 99.02 to be exact, but 99. Then I'll keep watching for a bigger pullback, even on a bounce. If we hold in here, we got cycles at the bottom getting to oversold conditions. I will then be paying attention to tomorrow with today's high to see if we can break above it for a potential percent beat buy if this does set up properly. Other than that, if we close below 99, the remaining target on the sloppy head and shoulders is over and the 50 EMA held. Crude. Here was a little, remember we talked about the 4-hour double, which triggered last Friday, gave multiple attempts to get in it, and spiking up last night, but then closing and then retesting the final target before rolling over. Now this spike up set up a potential double top. That's the only thing that will get me short-term bearish. If we close below 60.47 on a daily basis with a potential pullback, closer to 87.5. I will be keeping an eye, but my key first target on the breakdowns is 58.76 area because it's right by the 62.5. If this does trigger. Now, I'm not saying this has to trigger. It might not trigger because we're building a base around this prior key resistance area back middle to end of April, sold off in the beginning of May, came back up here mid-May, and retested that key resistance level, and now tested again and was rejected. But we did complete that 4-hour double. If we do break above this, remember, this is a weekly potential double bottom pattern against the rotation zone, but it is trying to chip away at this more at a potentially breakout path. Nothing yet. It could be an issue. You're spot on, Christoph. You are spot on. And inflation. They wanted inflation. Now they got a little too much inflation. And so be careful what you ask for. Sterling, again, financing, and if this starts getting out of control, especially with their longer term yields, and remember, the Bank of Japan owns a lot of this, and they are now very underwater on their bonds. Can I quick explain the candle counting stuff? Sure. Let me go back to that then, because this is something you should just, if you're trying to learn some of these patterns. So, just real quick, especially for new people watching in the background. As long as the doubles, let's just go through the double rules real quick. Double setup, as long as the right side leg gets above the 75% harmonic, okay, which it did, and does not exceed the extension of the 25% harmonic from the right-hand side, it is a potential double. So we know it met the criteria now. What do we want to do? We count between the two peaks. 1, 2, 3, 4, 5, 6, 7, 8. We got 8 between the two peaks. We count it. Starting on the candle after the peak, we count the same number of bars. 1, 2, 3, 4, 5, 6, 7, 8. It has to at least confirm the potential double top within the next 8 bars. Otherwise, the double's off the table. That's exactly how you do it. So you count between the two peaks. So 1, 2, 3, 4, 5, 6, 7, 8. Those are the highest two peaks. Then you start on the following bar and you count that number. If it does not confirm, to confirm it needs a trade below the base here. So it would have needed a trade below this low of 58.9275, which it did not do. It does not have to trigger within 8 bars. It has to at least confirm. The trigger is the close below that. Hope that makes sense to everybody. Christoph again with sharing sharing some great news. Crude has a strong positive seasonality tied to the beginning of July. Thank you for putting in that, Christoph. All right. Dollar Tree is earnings next Tuesday. Thoughts? Let's just peek a look at the deal. Dollar Tree. Thoughts on that? I mean, it's run pretty far. We got to do still from this last key high. We got to, again, set up your charts. What are my thoughts going into earnings? Well, the only thing short term is we do have a potential double top. If that were to trigger, I'd watch for the bigger pullback. On any earnings miss, I'd be watching still for the pullback into the weekly rotation zone. Other than that, we have to see this little pause area right here at the 37.5 harmonic. That would be my next short-term target up, which would, if again, it's still trending up. We are at weekly cycles at the top, which is the only thing that gives me pause. But for targets up with continued strength after earnings, 94.50, and then major target 105. On any beat, on any miss, if this is still valid or triggers before next week, that's the only thing to watch for the bigger pullback with that potential double. Other than that, even on a pullback, we got the first cross rotation zone, so I'd be watching for pullbacks and then potential long air entries. We are at weekly cycle tops, getting the daily cycle tops, so I would not be chasing it in the short term. There you go. You're welcome, Bull Strike Cheetah. Trying to teach as much as possible. We covered dollar, we covered that gold. Let's see. Remember, we had the double top against the rotation zone. It's still not invalidated. I would still be patient on the long side. It has not been able to get below the 50, but it's not been invalidated. Okay. Now, if you're looking for a longer-term play, it really doesn't matter. If you're trying to do something in the short term, this is not where I'd be rushing into gold. What else? The yen, we already talked about the bonds breaking down. A key level I'm looking at now, I don't have it on this chart, but I just put it up there, 143.17. If we don't close below that, I'll still be watching for, especially if yields pull back, I'll be watching for a weakening in the yen. So I'd be watching for a potential break above today's high tomorrow. Euro, getting closer to invalidating the final target on the Head and Shoulders top, but not yet. Spiders, little gap down. Today, at least yesterday we got the pausing bar in the spiders. So we know if we take out the 87.5, the next major target area is 609.76 to 613. That's longer term. We're going to be gapping down today, 588.30. So on any move back up, I'm paying attention to yesterday's low, 589.60, and then the close price of 592.85 for the gap fill. Key support for me is 585.35 to 585.50. All right. That's in the short term going if we get selling pressure into the open. The Qs, we also have the pausing bar now in the Qs. So if we do at some point break above the highs for Monday, the next key major target area is 537.55 to 540.81. The pullback, we're down slightly on the open 516.10. The key level I'm watching is the open, it's roughly the same. It is the same thing. The open and the low from Monday, 514.24. Below that, the next key area is back at about 507.50. You're welcome, Anissa. What invalidates the gold double top for me? The gold double top, since we did not hit the first target, according to rules, would still need a close back above 33.97. Okay? This is not surprising. Remember, it triggered with daily cycles at the bottom, and now they're climbing back up to the top. That's why I'm not real worried about any bounce back. Again, I talked last week. I'd be patient. I'm watching for rollover sell setups now, especially with cycles getting to the top. Then these are short term, not long term. These are not long term sell setups. These are short term. But if we were to close back above 33.97, then I'm watching for a potential resumption of trend and a new breakout higher on any pullbacks. If you want to be more aggressive, this does not technically invalidate it, but if you want to be more aggressive and start looking for breakout plays earlier, it would be around 33.65. Okay? So that's where that sits. Tesla. Remember, triple top territory, getting rejected from the 50% harmonic. But not a lot. What's interesting is Elon was out there trying to talk up robo-taxi stuff, and it sold off on that news yesterday, but there's no major topping pattern just yet. What else? NVIDIA so far sideways correction with the rising, another little gap down. We got the rising rotation zone still with sideways corrections. By the way, if NVIDIA dips into the rotation zone, the key magnet price is 129.93 on a gap fill. I will still be looking for, again, NVIDIA is still very overbought. Cycles coming down, so I'm being very patient on NVIDIA too, watching for pullbacks. I think that's about it. I'm not seeing too many questions. Meta, again, the double is still completely valid in play. All right. Double is completely valid, still in play. The bottom of the rotation zone is still right around 605, 606 area. We're trading 631. A key shelf to watch is 627 if you're watching Meta from the long side. With that, let's just peek at the S&P. S&P, we do have, again, a little mini. So this would be the only thing going into the open that I'll be watching now. Now this, if we do trade below 58.97.75, the potential double is off the table. Other than that, if we were to reverse and at least close up, we can see what it looks like on the 15-minute. It is valid on the 15-minute. Let's just check the targets. So, completely valid. I'd be paying real close attention if this were to trigger on at least a 15-minute close back above 59.34. Doesn't say there might not be some front run patterns for me, but that would be the follow through pattern. The key level, here are the target levels, but one of the key ones I'm watching then is right around there. Second target, and you see all this buying pressure. We spiked above it again here. Why am I watching that key target instead of this 59.59? Because, yes, even though we spiked up there a couple times in here and it's still a completely valid target, I'd be more aggressive on any snapback to 59.53. But this is not even triggered yet. I will be watching to see if these lows hold going into the open, though. Hope that helps everybody. Hope everyone has a wonderful, wonderful trading day. With that, I will be back tomorrow morning for the Unemployment Thursday. Thank you for tuning in, and I will talk to everyone later. Bye for now.